Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to show you some stats that talk about what the market tends to do during midterm election years. Okay, this is a midterm year. Okay, we have midterm elections in November. There's a strong historical precedent for the market to act a certain way during midterm years, but there's also a strong precedent for it to act a certain way after midterm years. So that's what we're going to check out today. If you like these kind of studies, if you like having quant studies, statistical analysis that kind of guide you during the year, check out my Masterclass. Okay, you can go to the homepage at Leavitt Brothers. There's a link up here saying Masterclass. You can click on that, and it'll give you an overview of what the class covers. In the class, I cover I do an entire chapter with dozens and dozens of quant studies that help guide you during the year. So if you like looking at quant studies, you ought to check it out. All right, let's get into the numbers here. All right, so for starters, these numbers are complements of LPL Financial. They've run the numbers. I'm not going to redo them. They do a pretty good job. All right, so what we have here is I have, starting in 1950, I have every single midterm year from 1950 all the way through 2018. Okay. Typically, you get a pretty sizable pullback during the year, as you can see there. And you can see here, this is 14% pullback, 26% pullback, 22%, 26%, 37%, 13%, 16%, 20%. This is the intra-year pullbacks during midterm election years. The average has been 16.9%. Okay, 2018, I don't have this number populated on this image. This number here was 20%, so just as high. Okay, so that's pretty bad. Okay, typically this is the weakest, one of the weaker areas, not areas, but one of the weaker times during a 4-year presidential cycle is the midterm year pullback, which is the year we are right now. So it's kind of a double-edged sword, because besides the Fed tapering and interest rates and the issues that we're currently seeing right now with a lot of these high-tech growth names suffering huge losses, besides just that, you throw like the double whammy on it that this tends to be a weaker time of the presidential cycle anyway. So it's kind of like two negatives are adding up here. Not a great headwind to deal with. So that's what it is. During midterm election years, we tend to get a pretty decent sized correction. But there's a light at the end of the tunnel. There's a little bit of hope, because the year following the midterm year low tends to be huge. Okay, you can see going back to 1950, you got like up 31%, up 44%, up 36%, up 33%, 33%, 44%, 34%, 57%, 40%. Okay, the average 1 year gain off the midterm election low is 32%. Okay, and this number right here was like high 30s, so this number is even higher. Okay, so just to kind of sum up, we tend to get a pretty sizable correction during midterm election years, but we tend to get a gigantic move off that low. Okay, and as I said, when you add in the headwinds we're already dealing with tapering and higher interest rates and the growth names that are completely falling apart, we're not likely to escape this weakness this year. Okay, but it's not all bad, because if history repeats, we tend to get a pretty big move off midterm year election lows. Okay, so the goal right now is survive. Okay, don't lose money. Even if you got to go to cash, that's fine. Just know that at some point in time in the future, later on this year, there's going to be a low, and there's a pretty good chance we're going to get a nice bounce off that low. And so, in trading, you want to try to make as much money as you can when the market is doing well, and you want to preserve as much capital as you can when the market's not doing well. So right now we're in capital preservation mode. Unless you're like a really good, slick, short-term trader, you're comfortable going short. If you're a long-only trader and you only want to trade, do swing trades, you probably should be laying low right now. And just know that a few months from now, maybe not till the end of the summer, maybe not till the fall, maybe not even till the end of the, beginning of winter, who knows? But at some point in time, the market's going to bottom, and we're likely to get a really good bounce off of that. Okay, so this will help guide you at least for a good portion of this year. So again, if you like studies like this, if you like quant studies that help guide you, that help kind of form the backdrop of how you operate, go check out my masterclass where I talk about dozens and dozens of these studies to help guide you. All right, that's all I have for you now. I hope you get something out of this. Good luck. I'll see you next time.